Well, FX and rates, I believe, are going to be in for a really volatile ride in 2025, and no surprises why. Basically, with the incoming Trump administration and a lot of uncertainty around what kind of domestic policies and tariff policies are going to get implemented, I don't think the markets fully adequately price that in because there's just too much uncertainty. So at the moment, what's driving dollar strength is U.S. exceptionalism. The U.S. economy is still extremely strong, inflation looking like it's sticky, and they've seen the market basically reduce the extent of Fed rate cuts for this year. On top of that, long-end yields in the U.S. have risen, as you mentioned. Now that's also in part due to supply concerns. So everything is basically pushing towards a stronger for longer narrative for the U.S. dollar, and it's really hard to fight that. And that's even before the impact of any potential tariffs get priced in. And I think that's the near-term risk, particularly for Asia. Asian currencies are already under pressure from the stronger dollar. If the tariffs do end up being more severe than people anticipate, there's going to be another additional headwind.
What is it that what would be perhaps the big thing that you'd be watching out for from a macro policy perspective, from a macro variable that would be something that you would be eyeing, aside of currencies, just in the macro environment?
Well, we're actually entering a space where what will drive the macro and also central bank reaction function is pretty much what the Trump administration's policies are going to be. So I think one of the things, unfortunately, that we probably have to do more of is just monitor Trump's social media.
Yeah.
Because
as simple as that.
It has been driving markets, and and that's something it's just the reality probably for the next 4 years. But beyond that, actually, what his actual policies are going to be. The details matter because, as I mentioned earlier, while we know tariffs are coming, the extent of it, the timing of it, is it going to be universal? Are they going to be carve-outs? There's still a lot of unknowns, which is not being priced in by markets because markets don't know what to price in.
Yes.
So therefore, the policy details matter. So that's why I'm saying it's not really the macro data, because the trade policies and other policies of the Trump administration will drive the macro, will drive reaction functions of central banks, and therefore will be the big driver of markets.